Hello traders, Nick here looking at Pfizer. Stock markets, or let's see, August 16, 2019. Stock markets had an interesting week. We have a sentiment crisis, bond crisis, looking at stuff to knives to catch. Pfizer popped up in a discussion, so I'm looking at it here. All right, so obviously a name that's been in the game for a long time. Death of late. The last earnings report, whatever they said, blech, nobody liked it. Falling into what? I don't know. 1 year daily chart is not enough, obviously. I do have this box. I do see an arrow, so clearly I have to expand my time frame. First of all, we note the level from which it fell. 42 was important to hold, lost it. This zone was important to hold, 39.5. Why do I pick this one? Because of these two candles right there. So let's expand and see what the heck's going on. Ugh. Okay, so this box is, I'm going to go to monthly to see where this box starts. Oh my gosh. Okay, so this is 1999 on. All right. Can it go lower? Clearly. In fact, if I consider all of this, this is where all the action happened down here. That's the point of control for this whole zone. Doesn't mean it's going there. I'm just saying. All right, so, well, this is a zone that has been pivotal. What does that mean? They failed at it right here. They tried to hold it. They tried to regain it. They fell, and it took them basically a decade to get back to it, fight it, break out from it, and now they're losing it? After all this work, they're losing it this quickly? Boy, I was going to say that would be a knife I'd catch. But looking at the monthly data, maybe not so much. But I'm going to go back to the weekly to talk about it. But first, I want to know that this was a level where I'd like to draw maybe a line, maybe not. So this is another zone right here, visually, that is important. So back to the weekly. All right. Same chart. This is that same box, falling through it. The good news is on the weekly basis for the last 5 years, this is the point of control. This is the level they loved the most. So, having said that, yes, it fell out of bed, whatever the heck the reason it was, but it's falling into support. Is it a hard line in the sand? No, but in this case actually is that one hard line in the sand. But to me, I'm not going to bank on it that it's going to be the absolute bottom. So it's a zone. This would be another level I would look at, 33 and change. And so you can pick your levels as to where would be a stop buy point. So if I love the company and I think it's going to come back, I would buy the shares for the long term and hope they come back. And if I do that, I have to be true to myself and put a stop out level, meaning I'll take red until this happens. And this is different for somebody, for one person to another. How much pain can somebody take depends on their own. Maybe somebody just wants to see no red, and as soon as it turns red, they're out. Some people say, okay, I'll watch it until 32. After 32, I'm out. Why am I picking these numbers? Pick one of these last bounces. So this is the most significant one. So if you can take pain until 30, then you say 29.95, I'm out. I'm just saying, these are numbers. This is a good consolidation zone right here, this little cluster, and this is where we're at. Why is that important? Because if I look, this is an important rejection. They loved it, and then they immediately spit in its face. 3 weeks, and then in 1 week, and then these are weekly candles. Keep that in mind, okay? So this is a full week worth of action. So how do I go long? I can buy the ticker itself, or I can buy some calls. And if I do that, if I'm looking on a long-term turnaround, I would buy them close to the money, or really above the money at the tail end of the deltas, and then go out in time. I'm not banking on an overnight sensation here. Or I can sell puts or put spreads, but only if I do homework and I'm okay owning the shares. I never sell puts naked unless I want to own the shares. Because if that happens, then the fall and something happens and the market crashes, then I'm forced to buy them. Even though it looked great when I did it, it doesn't look great now. I've been in that situation before, so it's not fun unless you know the stock. I know that this one sells at the mid-teens, maybe 17-ish PE, trailing 12 months, so it's actual PE, not forward PE. And it's probably 3.5 times sales and maybe 4 times book or something. So it's down to the bone. A lot of the fat is gone. A lot of the froth is gone. At least the fat from all of 2018 is gone. This is an important... Okay, so what are two important lines on this chart? Right here, 39.4, and right here. Those are probably the two. In fact, I'm going to do it right now. I'm going to put a box around these two so I know I remember that. So this one here and this one here. This we're going to do. Why is that? Because it's 2, 3, 4 weeks worth of action that was emphatic. Giant candle, immediate rejection. Giant candle and immediate rejection. That's as emphatic as I can see right here, right now. So I'm going to put that, and this way it'll be a visual reminder for the future to say, okay, these are important lines. So if I buy it here, I would exit somewhere around here. Why? Just in case. And if it falls down to here, that should be some sort of a bug out moment, or maybe a trigger to buy it at that level. Maybe they have a couple more bad days. Maybe we'll have some sort of a headline over the weekend. So these are my thoughts on Pfizer. If you need more information on specific trades, reach out to me. I'm going to share them with members. So if you're a member, then you're going to get it. Nick signing out.